Good morning. My name is William Lee, and before I tell you what happened in the silver market last night, I want to share something personal. I have been analyzing precious metals for 23 years. That is longer than some of your grandchildren have been alive. I have seen bull markets, bear markets, crashes, rallies, manipulations, and everything in between. I have watched people make fortunes and lose fortunes. And in all those years, I have learned one fundamental truth. The market is designed to separate emotional people from their money. Last night was a perfect example of that design in action. If you woke up this morning, checked your silver position, and felt your stomach drop, I want you to know something. You are not alone. Millions of people around the world experience that same feeling, that same moment of panic, that same fear that everything they had worked for was evaporating before their eyes. I understand that feeling because I have felt it too many times over the course of my career. It never gets easier. But what does get easier is recognizing what is actually happening versus what the market wants you to believe is happening. And those are two very different things. Let me tell you what actually occurred last night, and I am going to explain it in a way that makes sense without all the complicated jargon that financial people love to use to make themselves sound smart. Silver dropped from $75 to $64, while most people in North America and Europe were sleeping. That is an $11 drop. That is 15% of the value disappearing in just a few hours. For someone with $100,000 in silver, that means waking up to find $15,000 missing. Gone, evaporated, not because you did anything wrong, not because the fundamentals of silver changed overnight, but because someone with very deep pockets decided it was time to shake the tree and see who would fall out. Now, here is the part that nobody on television is going to tell you. While regular people were getting their positions liquidated, while retirement accounts were being damaged, while fear was spreading through the market like wildfire, someone was buying. Someone was accumulating every single ounce that got dumped onto the market. Someone was filling their vaults with silver at $64, $65, $66, $67. Billions of dollars worth of silver changed hands last night, and the people doing the buying were the same institutions that caused the crash in the first place. This was not a random market event. This was a deliberate wealth transfer from people like you and me to institutions with unlimited resources and no conscience. I want to take a moment here to speak directly to those of you who are over 55. You have worked your entire life. You have saved diligently. You have watched inflation eat away at your purchasing power year after year. You remember when a cup of coffee cost 50 cents and a new car cost $3,000? You have seen what happens when governments print money recklessly. You understand, perhaps better than any generation, why real assets like silver and gold matter. They are not just investments. They are insurance against a system that has repeatedly failed ordinary people while enriching the connected few. When I look at what happened last night, I do not see a disaster. I see a test of conviction, a test of understanding, a test of whether you know why you own silver in the first place. If you own silver because you saw a video on the internet and thought you could make a quick profit, last night probably shook you to your core. But if you own silver because you understand the fundamental reasons why it has value, reasons that have nothing to do with what price is printed on a screen, then last night should not change your thesis one bit. Let me explain those fundamentals in simple terms because they matter enormously. Silver is not just a shiny metal that people buy for jewelry. Silver is essential to modern civilization. Every solar panel requires silver for its electrical contacts. Every electric vehicle uses more silver than a traditional car. Every smartphone, every computer, every server, and every data center contains silver. The artificial intelligence revolution that everyone is talking about requires massive amounts of silver for the chips and infrastructure that make it possible. Medical devices use silver for its antimicrobial properties. Water purification systems use silver. The list goes on and on. Here is the mathematical reality that no amount of market manipulation can change. Every year, the world mines approximately 830 million ounces of silver. That is all the silver that comes out of the ground from every mine on the planet. But every year, the world consumes over 1 billion ounces of silver. That is a deficit of roughly 200 million ounces per year. And this deficit has been growing for 5 consecutive years. Where does the extra silver come from? It comes from stockpiles that were built up over previous decades, from vaults that are now draining at alarming rates, from reserves that are running dangerously low. This is not complicated mathematics. This is simple supply and demand. When you consume more than you produce, eventually you run out. The bathtub is draining faster than the faucet can fill it, and last night's crash did absolutely nothing to change that fundamental reality. In fact, it made it worse, because when the price drops dramatically, what do smart investors do? They buy more. They see a sale on something that is genuinely scarce, and they take advantage of it. So the crash that was supposed to scare people away from silver actually increased physical demand. I want to tell you about what I observed in the charts last night because there was a very specific pattern that experienced traders recognize immediately. When the crash hit its low point around $64, a particular type of candle formed on the chart. It is called a doji candle. Without getting too technical, a doji forms when the price moves dramatically in both directions during a period, but ends up closing very close to where it opened. The candle has a tiny body with long wicks extending above and below. What this tells you is that sellers pushed the price down hard, but then buyers stepped in with equal force and pushed it right back up. By the end of that period, the battle between sellers and buyers ended in a draw. But here's the crucial point. The sellers were exhausted. They had thrown everything they had at the market. Forced liquidations, margin calls, stop losses getting triggered. All the weak hands had been shaken out. And the buyers absorbed every bit of it. They bought everything that got dumped. The doji candle at the bottom of a crash is one of the most bullish signals in technical analysis. It tells you that the selling pressure has been exhausted and the buyers are now in control. Now let me tell you something that your financial advisor probably will not mention, and it might make you uncomfortable, but it is the truth. The silver market is manipulated. This is not a conspiracy theory. This is documented fact. In 2020, JP Morgan, one of the largest banks in the world, was fined $920 million for manipulating precious metals markets. They admitted to spoofing, which is a practice where they place fake orders to move the price in a direction that benefits their trading positions. They paid the fine, which sounds like a lot of money until you realize the profits from the manipulation were many times larger. The fine was just a cost of doing business, and there is no evidence that the manipulation stopped. In fact, everything we see in the market suggests it continues to this day. Why do I tell you this? Not to make you angry, although you have every right to be angry. I tell you this because understanding how the game is played is essential to not becoming a victim of it. The crash last night was not random. It happened in the middle of the night when retail traders in Western countries were asleep and could not respond. It happened at a time specifically chosen to maximize the damage to regular people while minimizing the risk to institutional traders. It was coordinated, deliberate, and designed to transfer wealth from your pocket to theirs. The question is not whether this is fair. It is not fair. The question is what you do about it. Here's what I would suggest, and please understand this is not financial advice. I am not a licensed advisor. I am simply a person who has watched these markets for a very long time and wants to share what I have learned. The most important thing you can do is understand your own situation. Why did you buy silver in the first place? What is your time horizon? Can you afford to hold through volatility? If you bought silver as a long-term store of value, as insurance against currency debasement, as protection for your family's future, then a short-term price drop does not change your thesis. The reasons you bought silver are still valid. In fact, they are more valid than ever given what is happening in the global economy. If you were someone who used leverage or borrowed money to buy silver, last night was a painful lesson in why that is dangerous. The market can stay irrational longer than you can stay solvent. If you are trading with leverage, you can be right about the direction and still get wiped out along the way because of short-term volatility. For people over 55 who are approaching retirement or already retired, the last thing you want is to lose sleep because of market swings. My suggestion is always to own what you own outright. Physical silver that you hold in your possession or in a secure vault, silver that nobody can margin call, silver that nobody can liquidate without your permission, silver that will still be there when you wake up in the morning, regardless of what happened on the trading screens overnight. Let me tell you about something that is happening in China right now, because it provides important context. During this crash, the Shanghai Futures Exchange saw trading volume that was almost unbelievable. Over 1 billion ounces worth of silver contracts traded in a single morning session. That is more than an entire year of global mine production trading in just a few hours. And here's the remarkable part. Even after the crash, Chinese buyers are still paying $10 to $15 more per ounce than Western buyers. That difference is called the Shanghai Premium. If silver was really worth $64, sophisticated Chinese institutions would not be paying $75 or $80 for it. They would not pay more than necessary. The fact that they are willing to pay such a large premium tells you that they know the paper price is not reflecting the true value of physical silver. They know the physical market is tight. They know something that the casual observer does not see when they look at price quotes. I want to give you some historical perspective because I think it helps to understand that what we are experiencing is not new. In 1979, silver was in the middle of a massive bull market. It crashed multiple times along the way. Each crash felt like the end. Each crash created panic. Each crash shook out investors who could not stomach the volatility. And then in January 1980, silver hit $50 per ounce. The people who held through the crashes made life-changing wealth. The people who panicked sold along the way missed everything. In 2011, silver rallied from $8 to $49. There were multiple crashes of 20% or more along the way. Every single one felt terrifying at the time. Every single one was a buying opportunity in retrospect. I am not telling you that silver will definitely go higher from here. Nobody can predict the future with certainty. What I am telling you is that crashes during bull markets are common, and historically they have been opportunities, not exits. The people who panic during these events almost always regret it. The people who stay calm, understand the fundamentals, and maintain their conviction almost always come out ahead. Here's something I want you to really think about. Last night, billions of dollars worth of silver changed hands. On one side of those transactions were people who were forced to sell, margin calls, liquidations, panic selling. These were not voluntary sellers. These were people who either used too much leverage or let fear override their judgment. On the other side of every one of those transactions was a buyer, someone who had the cash, the conviction, and the patience to accumulate silver at $64, $65, $66 per ounce. Someone who saw the crash not as a disaster, but as a gift, a chance to buy something valuable at a discount. Which side of that transaction do you want to be on? The person who sells at the bottom because of fear, or the person who buys at the bottom because of understanding? That is the fundamental question that every investor faces during moments like this, and how you answer that question will determine your financial outcome. Let me share what I am specifically watching in the coming days and weeks. First, the Shanghai Premium. If it stays elevated, that confirms physical demand remains strong despite the paper price crash. Second, the COMEX vault inventories. On Tuesday before the crash, 3 million ounces were removed from vaults in a single day. Metal is leaving the system at an accelerating rate. If this continues, we are heading toward a physical squeeze where there simply is not enough metal to meet demand. Third, the delivery statistics. Normally, most futures contracts are settled in cash. Right now, we are seeing an unusual number of contracts settling in physical metal. Traders want the actual silver, not paper promises. That is a significant change from normal market behavior. I want to make a prediction and put it on record so you can hold me accountable. Within 60 days, silver will be back above $90 per ounce. I am not saying this will happen in a straight line. There may be more volatility along the way, but the fundamental setup, combined with the technical signals, combined with the institutional buying behavior I am observing, all point to significantly higher prices in the near term. If I am wrong, I will come back and explain what I missed. If I am right, I hope you will remember this moment and understand why staying calm during the chaos was the right decision. Now let me address something that I think is particularly important for those of you who are older and perhaps managing retirement savings. The traditional advice from financial advisors is to own a diversified portfolio of stocks and bonds. The classic 60% stocks, 40% bonds allocation. This advice made sense for decades when interest rates were falling, when inflation was under control, when bonds actually provided a safe return. But we are in a different world now. Interest rates have been manipulated to near zero and sometimes negative. Inflation is eroding purchasing power at rates not seen in 40 years. Bonds are not providing the safety they once did. Stocks are trading at valuations that historically have preceded significant declines. In this environment, precious metals serve a role that they have served throughout human history. They are a store of value that cannot be printed by governments. They are a hedge against currency debasement. They are a form of financial insurance that protects your purchasing power when everything else fails. This is not about getting rich quick. This is about protecting what you have worked your entire life to accumulate. Silver at any reasonable price is not expensive insurance given the risks we face. I want to leave you with a thought that I hope brings some peace during what I know is a stressful time for many of you. The price of silver on a screen is just a number. It fluctuates every second based on the actions of traders, algorithms, and institutions with their own agendas. What does not change is the physical silver in your possession. An ounce of silver today is the same ounce of silver it was yesterday, regardless of what price the market assigns to it. The metal does not evaporate during a crash. It does not disappear from your vault. It sits there, patient and eternal, waiting for the moment when the market recognizes its true value. Throughout human history, silver has been money. It has outlasted every fiat currency ever created. The Roman denarius, the Spanish real, the British pound when it was backed by silver, the US dollar before Nixon closed the gold window. All of these currencies have been debased over time. Silver remains. In a world where governments are printing money at unprecedented rates, where debt levels are higher than any time in human history, where trust in institutions is declining, the ancient wisdom of holding real assets has never been more relevant. I remember something my grandfather told me when I was young. He said, "William, there are two kinds of wealth. There is the kind that exists on paper, that depends on promises from people you will never meet. And there is the kind you can hold in your hand, that nobody can take from you without your consent. The first kind can disappear overnight. The second kind has protected families for thousands of years." He was talking about gold and silver. He learned that lesson during difficult times that I was too young to understand, but I never forgot his words. And every time I see a market crash, every time I see panic spreading, every time I see people selling their real assets because of fear, I remember what he taught me. Last night, someone tried to shake you out of your position. Someone with billions of dollars and no regard for your financial well-being orchestrated a crash designed to make you feel afraid, to make you doubt yourself, to make you sell your silver at the lowest possible price so they could buy it from you. The question now is whether they succeeded. Did they take your silver? Did they transfer your wealth into their accounts? Or did you hold firm, understanding that the temporary price on a screen does not change the fundamental value of what you own? If you held, I want you to know that you did the right thing. The fundamentals have not changed. The supply deficit is still growing. The industrial demand is still accelerating. The physical market is still tight. The institutions are still accumulating. Everything that was true about silver before the crash is still true after the crash. The only thing that changed is the price on the screen. And that price, as history has shown repeatedly, will eventually reflect the underlying reality. For those of you who are still uncertain, who are wondering whether to hold or sell, I want you to ask yourself one question. What will silver be worth in 5 years? In 10 years? When solar installations have doubled or tripled from current levels? When electric vehicles are everywhere? When AI data centers have multiplied exponentially? When governments have printed even more money to fund their deficits? Do you think silver will be worth more or less than it is today? I cannot tell you what to do with your money. That is your decision and your responsibility. But I can tell you that every fundamental indicator I follow suggests that silver will be significantly more valuable in the future than it is today. The crash last night did not change that outlook. It simply offered a better entry point for those with the wisdom to take it. Before I go, I want to thank you for taking the time to listen to this analysis. I know it was long. I know there was a lot of information to absorb, but I believe that understanding is the foundation of good decision-making. Too many people in finance try to scare you or rush you into decisions without giving you the full picture. I would rather take the time to explain things properly and trust that you are intelligent enough to draw your own conclusions. Take care of yourselves and your families. These are uncertain times, but they are also times of opportunity for those who understand what is happening. Silver has been protecting families for thousands of years. It protected them through wars, through depressions, through inflations, through currency collapses. It will continue to do so long after we are gone. That is the legacy we leave to our children and grandchildren. Not paper promises that can be broken, not digital numbers that can be manipulated, but real, tangible wealth that has stood the test of time. The crash happened. You cannot change that. What you can change is how you respond, with fear or with understanding, with panic or with patience, with selling or with holding. The choice is yours. But I hope this analysis has given you some peace of mind and some perspective during what I know is a difficult moment. Welcome to the new era of video creation with HeyGen. Simply type your script to get started.